and welcome to the Finance Auditing Committee of Thursday, August 26, 2021. It is 10:30 a.m. and calling the meeting to order. Before we begin, please note the meeting is being recorded. And Madam Secretary, can you please call the roll?
Thank you. Director Cochran.
Here.
Director Grosboll.
Here.
Director Maston.
Here.
Director Theriault.
Here.
Vice Chair Fredericks.
Here.
Chair Rabbit.
Here.
And President Parr.
Present.
Thank you. You have a quorum, and you also are a committee of the whole. Also on the line, we have today Directors Garbarino, Hernandez, Hill, and Snyder. I'm going to confirm staff. Dennis Mulligan.
Present.
Joe Wire.
Yes.
Ava Bauer-Furbish.
Present.
Madeline Chun.
Here.
Steve Miller. Absent. Mona Babauta. Absent. Jim Swindler. Absent. Kelly Hopper.
Present.
Present. Thank you. That confirms staff on the line.
Great, thank you very much. And once again, I want to remind everyone to mute their phones until after the staff's presentation, and remember to unmute when we open it up for directors' discussion. After staff's presentation, I'll be asking for any questions, comments, or concerns on the item. If there are any, the Secretary or I will call on you accordingly. And after the discussion, we will ask for any public comment before moving on, so please follow along by referring to the page numbers located in the bottom right-hand corner of your meeting packet. And Madam Secretary, can you please introduce the first item?
Thanks, Chair Rabbit, for that. Item number 3 is ratification of previous actions by the Audit Controller. Packet of commitments, ratification investments before you, and begins on page 3. Leslie Murphy is on the line to provide her report, and that begins on page 9. Ms. Murphy, go ahead.
Thank you. Good morning, everyone.
Good morning.
Good morning. Let's go ahead and get started. As usual, on page 10, we'll start with an update to the U.S. Treasury yield curve. So what we can see in looking at the table on the bottom right is that yields actually decreased for intermediate and longer term obligations during the month of July. Now, on the surface of it, this doesn't really make sense, right? With inflationary fears coming to the fore, driven up by the run-up in the stock market, massive stimulus dollars still floating around the economy, and generally pretty strong consumer spending, you would expect to see rates increase, right, not decrease. But we do think that digging a little bit deeper, there might be a few reasons why rates have fallen recently. First, our Delta variant concerns. Secondarily, we have seen some economic growth projections being revised lower. And finally, we are also seeing some pretty significant political gridlock causing delays on a massive pending infrastructure spending bill. So this is definitely something we're going to continue to keep our eyes on. And of course, all investor attention will be focused on the Federal Reserve, which is meeting this week in Jackson Hole. Investors are hoping for any guidance from the Fed Chair Jerome Powell regarding any plans to start tapering the Fed's massive bond buying program, which has been in place for over a year now, with the goal of keeping interest rates low. So the thinking is step 1 will be the Fed indicating when they might start tapering those asset purchases. We might get an announcement on that later this year. That might start next year. And then in a year or two following, the Fed might actually start hiking rates. So all eyes will continue to be on the Federal Reserve, especially this week. Now that said, let's go ahead and jump back to page 14 of your agenda packet. I'm sure you were all very excited to see that today is the one time each year that we discuss the total return performance of the district's general fund portfolio. While I do discuss total return with Joe and his staff behind the scenes every quarter, we decided to save the fun for this group and limit it to just once a year. So as a refresher, what we're going to be talking about mostly today is total return. Now, every month we report out yield to you, but this is the one time a year when we talk about total return. So to just kind of compare and contrast those two numbers, yield is a forward-looking number. It's a projection that expresses an annualized rate of return at a point in time. It assumes no change in cash flow, no change in market value, and reinvestment at the same rate. So it's really a forward-looking projection that's known at the time the security is purchased. By contrast, total return is a backward-looking number. It expresses a rate of return over a specific time period, and it does take into account all changes in the portfolio, including earnings, market value changes, trading activity, and cash flow. So it's a much more holistic number that's backward-looking. Now, the real kicker for total return is that it's impacted by changes in interest rates, because total return is essentially income or interest earnings plus or minus changes in market value. And those market valuations of your fixed income holdings move inversely to changes in interest rates. So when interest rates move up, you'll see market values move down. When interest rates move down, you'll see market values move up. So to put some real numbers on that, let's move back to page 15 and take a look at your general fund portfolio earnings analysis. I do like this page because it helps us to put that total return concept into real numbers. So that top line is interest earned, and you can think of this as real money in your pocket. This is the amortized value of all the coupon payments for all the securities in your portfolio. That number is generally still pretty high. It's still pretty strong, but we have seen that number start to fall off quarter over quarter, and that makes sense because rates have fallen in the marketplace, and as some of those older, higher yielding securities roll out of your portfolio and mature, we're forced to reinvest at lower market yields. So all told, for the past calendar year, interest earnings came in at $3.8 million. Given that rates are expected to remain low for at least the next year or two, I would expect to see this number look a little bit lower even when we have this conversation next year. Secondarily is realized gains and losses. These are accounted for when we sell a security out of the portfolio. But that third row down encompasses change in market value. So here's where you'll see the most volatility. And keep in mind, though, that this is an unrealized change in market value. Most of the securities in your portfolio we hold until maturity, so you wouldn't be realizing that change in market value, but we do report it out to you because it is a component of that overall portfolio earnings and the overall total return number. So all told, change in market value was negative this year, and that's largely because for the most part, rates have increased over the past year, and that's also a reflection of investors' expectations of relative value over different sectors. But when looking at total portfolio numbers, that total portfolio earnings is strongly positive at about $1.16 million for a total return percentage of a 0.42%. Moving on to page 16, almost done with a massive influx of numbers. But not quite. Now, we don't think it's enough to just look at your portfolio's performance in a vacuum to really give a view of how your portfolio is performing. We also like to compare the performance of your portfolio to various industry indices. Now, keep in mind, our goals are a bit more nuanced than just beating a single index. I say it every time, but really our primary goals are to maintain the safety and the liquidity of your portfolio. And as part of that, we also look at the district's projected cash flows to make sure that we're properly aligned there. But that said, we have performed quite well. And as we can see on the data shown on this page, in most cases, we've outperformed the indices shown for most of the time periods as well. Now, the only exception was during the first quarter of 2020 when we were conservatively a little bit short and not able to capture fully the market value appreciation that occurred when rates fell so dramatically. So that shows up in our 3-year number. You can see we're trailing versus a couple of the indices on the 3-year number. But by and large, we're well ahead of the indices shown for the past quarter and the past year, and then the longer 5, 10, and since inception numbers as well. And really that outperformance can be attributed to the active portfolio management that Michael and his team do for you in your portfolio, which is quite frankly what you're paying PFM to do. You're paying us to monitor the markets and to actively trade in order to add value to your portfolio. Skipping back now to page 19 of your agenda packet, your portfolio does remain well diversified and in compliance with both California government code and your investment policy. And finally, on a personal note, I wanted to let you all know that this will likely be the last time that you hear from me this calendar year. In some exciting news, we are expecting baby number 3 here in the Murphy household in just the next few weeks. So I will be out on maternity leave until January. But of course, I will be with you all in spirit, and I leave you in the very capable hands of the rest of PFM's team based out of the San Francisco office. And that engagement will be led by my boss, Monique Spike. Monique is great, and you will be hearing from her at least once in my absence. But I will certainly miss you all and look forward to speaking to you again when I'm back in January. With that, any questions?
Well, Ms. Murphy, on
Is
behalf of the
it
entire
a boy or a girl?
congratulations. Oh,
Thank
Is it a
you.
boy or a girl?
It's another girl. So I take solace in the fact that while we may be outnumbered in the parent versus child ratio, at least when it comes to female-male, I'm in good company. 3-2.
3-2. Good.
well, congratulations, really.
Yeah.
As I told my wife when we had our third child, that's when we went from man to man to zone.
Maybe I should get some advice from you.
Yeah, just, well, I don't know what it would be, but congratulations and enjoy everything. And thank you for
Thank you.
Most. Are there any questions, comments, or concerns on the item? Not hearing any. I think, again, thank you for monitoring everything. And, you know, some strange times we're in still. And it's important to have your expertise and your firm's expertise following along. So thank you so much for that. And that concludes then our discussion on the item. Again, Ms. Murphy, congratulations, best of luck, and see you in January. We'll be thinking of you. Before we take our vote, is there anyone wishing from the public wishing to speak on item number 3?
We have no speakers for item number 3.
Great. Can I have a motion on this particular item, please?
So moved.
Also move.
Okay.
Second.
Madam Secretary, I take it you got that, and if you do a roll call.
I got
please.
it. Thank you. I have a first from Director Fredericks and a second from Director Cochran, starting with Director Arnold. Absent, Director Conroy. Absent, Director Fredericks.
Yes.
Thank you. Director Garbarino. Director Garbarino? I see her. Director Grosboll?
Yes. Sorry.
Oh, sorry. Thank you. Director Grosboll?
Yes.
Thank you. Director Hernandez?
Aye.
Director Hill?
Yes.
Director Meston?
Aye.
Director Melgar? Absent. Director Rabbit?
Aye.
Aye. Director Rodoni? Absent. Director Snyder? Director Snyder?
Aye.
Moving
Sorry
on,
about that.
Hey, no problem. Director Stephanie? Absent. Second Vice President Cochran?
Yes.
First Vice President Theriault?
Yes.
And President Barr?
Yes.
Thank you. That motion passes unanimously.
Great. Thank you all very much. We'll move on to agenda item number 6, since there are no actions to authorize for items 4 and 5. Agenda item 6 is the status report on the fiscal year 2020-2021 budget. The staff report begins on page 27, and Mr. Wire with us. Please begin your report.
Thank you very much. Yes, in front of you is a status report on the budget for the 2021 fiscal year budget. That's the one that finished June 30th, so a little over a month ago. We're reviewing it this month because, as you know, it takes us a little longer to wrap up the year-end close, and also because I was out last month and I wanted to make sure that we were able to touch on this report. As you know, that just a quick reminder, we started out this last year with a lot of indecision and a very large budget deficit of close to $100 million. We put together this report with the board as an idea to make sure that we, the staff, the board, and the public knew what progress we were making toward balancing that budget. And then we've looked at it, as you guys are well aware, every month. Fortunately, it is balanced, as you all know. And the primary reason, of course, is the availability of one-time federal funding. We've had several different tranches that came in, and we'll take a look at those again. And then also the aggressive, efforts to reduce the costs of the district. Primarily, that was benefited from the fact that the demand for our services in transit dropped dramatically. So we were able to reduce the amount of service we were providing, and that reduced the cost structure of the district. So if we can just turn to page 29, that's the spreadsheet we've been looking at, every month. It hasn't changed from when a few things have changed, but very little since you last saw it. The top right-hand corner is the close to $100 million number that we started with in the budget when we passed the budget over a year ago. And then down, the things that have changed are down at the bottom. Line 12 is where we every month take a look at the actual bridge traffic and in other words, bridge revenue and bus and ferry toll revenue, and put it in this report to make sure that we're up to date. And as you can see, the year ended up slightly better in bridge tolls than we had projected, and the adjusted projections over the course of the year. As you know, we had to adjust it. And then the same with bus and ferry. It's almost right on, because we did make some adjustments to bus and ferry fare projections over the year so that we would be closer. As you can see, those are the non-bolded numbers in the columns. And then the details of those numbers are in the tables that follow, on the pages that follow. You can see every month, you can see how we did compared to what we were projecting. And we will follow the same process next year because the volatility, as I think was mentioned at the Transportation Committee, is still there. We really, don't know. It's obviously much lower than expected, and we really don't know exactly what's going to happen. It depends greatly, of course, on COVID and on people's behaviors around that and the rules that people are following in order to keep the COVID disease at bay. And then the last thing on the very bottom of the page, there is the excess funding. We have attributed the CRISA, the second tranche of CRISA funding, to this budget, and that produced what it allowed us to do is to free up some of the toll revenue we would have spent. In this particular chart, it's estimated about $18 million. We don't have the final number yet. That we're still going through the close with the auditors, but there will be monies that we are able to free up that will move into a future year to fund future transit services, and that will enable us to continue funding the district's services, even at a time when the one-time fundings cease. If I can. The next, and that is really it for the report. Follow it is just the tables I mentioned that have the monthlies and also the funding graphs that we've seen every month. So if there are any questions, I'm happy to take them.
Thanks, Joe. Any questions, Mr. Wire? Not hearing any. Is there anyone from the public wishing to speak on this particular item, Madam Secretary?
We have no speakers on this particular item.
Okay. No action is required for this item. Again, we appreciate the update on the budget. We'll move on to item number 7, which is the status report of the fiscal year 21-22 budget. And that report begins on page 37. And Mr. Wire, go ahead with that one.
Thank you, and very much. And this, of course, is the similar report that we just covered, except for the year that we just started July 1. You will see this every month, just like you did with the last one. It is very similar, and we intend to follow a similar pattern, finding that it did work well for us in communicating with the public and the board and staff about the situation the district is in. And so we'll continue to do that. This one, of course, is slightly different. The projected budget deficit we're starting out with was approximately $75 million. We have already received $57 million in ARPA funding. The district has received permission to apply for that and will be doing so shortly, those fundings. And then we also have some total carryover money that's going to fund this budget. So based on the projected spending that we have in the budget, and that's based on our projection at the time, and of course the future may be just slightly different, we believe that this budget will end up being balanced. If you turn to page 39, that's the same table. It's obviously much shorter because fewer entries at this time in the early part of the year. In the top right-hand corner is the close to $75 million deficit. Then we've got the first tranche of funding coming in from ARPA on line 1, and that reduces the deficit significantly. And then there was an update to our STA TDA funding that we get for providing transit service in the Marin and Sonoma County areas. And that was updated by the MTC. And so that gave us a little more revenue than we projected, and that shows up in line 2. Then we will be looking at tolls and fares as they come through each month. The reconciliation, that's going to be line 3. And right now we don't have data for that. We're just too quick at the end of July, the month of July. So you'll see that next month. And then at the very bottom, line A is the toll revenue carryover. And so we're saying at this point, of the money that toll revenue we carried over from the previous years, because we had grant funding those years, we'll be using $13.7 million of that to balance the rest of the budget. This is a dynamic, absolutely a dynamic document. It will change every month a little bit, and we will talk about it each month so that we keep up. But based on all of our projections, unless something dramatic appears, that given the grant funding we've received, we project that we'll be able to get through this fiscal year by balancing the budget. Are there any questions? I'm happy to take it.
Great, thanks, Joe. Again, any questions for Mr. Wire? Not hearing any. Appreciate the report again, and appreciate the format going forward. So thanks so much, Mr. Wire. Very much appreciate it. That concludes the discussion on this item. Is there anyone from the public wishing to speak on item number 7, Madam Secretary?
There is. So we actually have David Pilpel who wants to speak on item number 7. So give me 1 second, and we're going to introduce Mr. Pilpel.
Great.
David, are you still on the line with us?
I am. Can you hear me okay?
We can hear you. Thank you.
Excellent. Okay. So I appreciate this report. I had comments on kind of last year's budget, this item, and the next item, but I'm just going to sort of roll it up all into one comment. So these charts, the attachment A is one of my favorite things that I look at every month, as I'm sure you all do. I just wanted to understand so that I can interpret this correctly. The bottom line on item 6, the 18.7 million toll subsidy available, is that what becomes line A, sort of the bottom line on item 7, that it goes from 18.7 million down to 13.7 million, or do I add those two together and that 18.7 then offsets the 13.7? I'm just not clear on how that math works. Perhaps that can be explained. In any event, looking to item 8, the July 2021 trends look promising, but let's remember the $1.4 million weekly loss that General Manager Mulligan mentioned earlier, which is clearly not sustainable in the absence of this federal funding. So as of now, I was trying to understand when the federal funds appear to exhaust, if it's the end of this fiscal year, like June of 22, or if it looks with at least the first tranche of the ARP money, or the second tranche, excuse me, which has yet to be allocated or distributed. whether that will allow some funding into fiscal 22-23. But I'm not sure on sort of where that cliff date is, and backing that up by a few months by when more significant balancing decisions will be needed to keep the operating budget in balance going forward. So in conclusion, while transit planning continues given all the uncertainties, I would also renew efforts on the district's strategic financial plan. I think that was going to restart in the spring of 2020, and that was postponed due to COVID. But I think sometime in the next few months, it would be excellent to restart those efforts and look at what the district can do both on the expense and revenue and services sides to remain in balance in the operating budget going forward. I hope that all makes sense. Tried to distill a lot of information here. Thank you.
No, thank you very much for your comment. Very much appreciated. Any other public comment, Madam Secretary?
No, that concludes public comment.
And Mr. Wire, I'm not sure if you or the general manager can just respond very quickly to Mr. Philpow's comments.
I'd be happy to address the direct ones to the charts, and I think that because I think obviously they're very good questions about the explanation. And the first report that we covered, item 6, the 18 million at the bottom is an estimate at this time. We're having our our auditors are in for their final part of their audit, and we will be getting that number nailed down in the next couple of weeks. So it does relate to then the line A in item 7 that was pointed out at the 13 million. And we feel comfortable that, of course, that estimated 18 million will not fall very much down below 13 million. So essentially, we're using this report on item 7 is using 13 million of the, or 13.7 of the 18 million that we thought we could carry over. So it's using it up here, which means there's a little bit left over. Of course, as we all know, as we go through the year, if tolls or fares don't come in as we expected, or expenses are slightly higher, we may use up that extra 3 or 4 million and then some. We may need more, or we may need less. That's what we'll be tracking month to month as we go forward. So yes, those two are connected. And then the second direct question about funding was the one about ARPA funding and the first and second tranche, and how long would it take the district? And we don't have a definite answer. It's now that we're looking at a period of time that will run, we believe, longer than 12 months, 14, 16, 18. It's longer than we have precisely projected. And we don't know how, of course, what the size of the second tranche of ARPA funding will be either. So there's two huge variables there. But there is, we believe, as we're stating here, that we'll be able to make it through this fiscal year with existing ARPA funding, and that yes, some will go in, we believe, into 2023, which is the end of calendar year 2022. Whether we'll make it into actual calendar year 2023, in other words, the second part of the fiscal year, I don't know, but it's somewhere in that line, and a lot of that at that time period, say the end of calendar year 2022. And it really depends also, of course, on how much the second tranche of ARPA funding is, and truly what happens to COVID, how quickly the rules change for people's travel, and then of course how quickly people do change their travel patterns, and whether they return or most of them return back to their existing past travel patterns. So we have all those variables that we'll be watching in the coming months. I'm expecting, we're all hoping that in 4 to 6 months from now we'll be able to look out over the next 6 months and have a better understanding. And I think that's one of the reasons why MTC delayed, and the NTC and the operators all agreed to delay it to a second tranche so they could have a better view of what things look like later this fall, or even into this winter, before they divide up that next bunch of monies.
Thank you very much. And I could just say, as an MTC commissioner, you're absolutely right. And I think it's waiting until that time frame to kind of see where we are, what the projection, bridge. Appreciate you addressing those issues, and thank you for the comment again. And I believe that there's no action item required on this item. So we're going to move on to item number 8. Okay, with my colleagues, we have the monthly review of the Golden Gate Bridge traffic tolls and bus and ferry patronage and fares. That's on page 47. And again, Mr. Wire will present this item as well as 9A, which is the monthly statement of revenue and expenses. That's on page 61. 9B as well, which is the monthly statement of capital programs and expenditures. That's on page 79. And Joe, can you go ahead and begin your presentation?
Thank you very much to all on the committee and the committee as a whole. We have, if you notice in these reports, we have both data for June, which is the roll-up of the entire year last year, and for July. Because July is just a single month, I'm going to keep my comments to June, but I'm happy to ask questions about the 1 month of July if you have any. We will then, of course, talk about July, August as we move forward in the year, in this fiscal year. So the first page, it's kind of best to push down to page 49. You have this is a summary of last year. It's got all of the data for traffic and for revenue coming from the bridge, the bus, and the ferry system. All in those 6 boxes that we've looked at, month after month over the years. It is a lot of data, of course. I think what we've noticed now is we're starting to compare, and I think I mentioned this about a quarter ago, 3 or 4 months ago, we're starting to compare COVID data against COVID data. So it really isn't that useful, except for it does tell you that things are getting slightly better. In other words, this COVID month of June is better than the last COVID month of June last year. But what you're not seeing is the fact that the June prior to that, when there was no COVID, things were a lot better. And that's sort of the measure. And I think Dennis mentioned it earlier when he said, bus and ferry are still, ferry still down 90%, bus is still down, anywhere from 70 to 75%. Bridge traffic it depends on the time of day, of course, but overall it can be down anywhere from 15 to 20%. So we're still looking at that. One thing that makes these charts, I think, are still useful is if on the far right hand, the right-hand boxes, the 3 right-hand boxes are revenue. The top one is bridge revenue. If you look at the 3rd column from the right, that's the one for the actual revenue for 2021. As you can see, going down that, it started out in the $8 million range and got up to $9 million in a month, and then it got down to a little bit around 7, and then it has a couple of big bumps at the bottom in April and June. Those weren't actually traffic bumps. If you look over, you can kind of see there wasn't traffic if you look to the far left. Those were timing of when the money arrived at the district. MTC and the conduit had a little trouble with timing of getting us the revenue. It's an accounting issue, but in general, we did see growth. But even getting, let's say it was averaging about $9 million a month the last couple of months. That's $3 or $4 million less. If you look 2 more columns more to the left, you can see that actual revenue in 1920, in the early months of that, July, August, they was averaging 13 million a month. And so, even though we've grown, as we've all pointed out, we're still missing $2 or $3 or $4 million a month, depending on the month. And that's an enormous amount when you look at over 12 months. And of course, that money is what we use to then subsidize the bus and ferry systems. And they are bringing less too. If you do the same kind of analysis looking at bus and ferry, the next box down is bus. The 3rd to the right column is actual revenue for bus. It was, averaging around 200,000, 200 to 250 a month. At the end, the last couple of months, it goes up to 300, which is a great sign, 300, 350. But then if you go 2 more columns over, you can see what it was getting last pre-COVID in July and August. It was getting 1.3, 1.5 million a month. So, we're about 20% of what we'd want, or 25% of what we'd try to get, what we used to get. And then lastly, ferry is the same way. If you can see earlier in the year, that's the column, the 3rd from the right, revenues were down as low as under $50,000 a month. We're now up to 100 to 200. Of course, Pre-COVID, we were getting 2 million, 10 times as much. And that's sort of that's of course the revenue we're emitting, and in order to survive this, we use the federal one-time funding. As we go forward, we're hoping to see that traffic grow and bus patronage and ferry patronage grow, so we don't have to use as much as the one-time funding as quickly. Okay, that's it for that chart. If there's any questions, happy to take it. Otherwise, we move on to page 61, and that's the next board item.
Not hearing anyone speak up, so why don't you go ahead, Joe?
Okay, monthly financial statements for the 12 months ending, and again, as I said, I'll just be talking about the one for June rather than July. And on this page, you can see that just halfway down the page near the bottom, there's the actual revenue, actual expense, and the expense over revenue, and that's the key. Because of the receipt of federal funds, our actual revenues were greater than our actual expenses. The number looks a little larger than it will be, and I'll get to that in a second. The actual funding was greater than what we projected by close to $70 million, and that was because we received $67 million in federal one-time funding. Otherwise, our projections came out somewhat close to what we expected. The expenses were considerably lower than what we projected, and that has everything to do with the reduction in service provided. That was to do with the lack of demand for bus and ferry services, and also to do with the hiring freeze. So if you look at the reports on that follow, just the next couple of pages where they actually have the line items, you'll see that the biggest changes came in salaries and benefits, and then professional services, and then fuel. Because if we don't have service, we didn't have as many staff. Because we had the hiring freeze, and then we didn't hire as many professional services. We didn't need as many of those, and of course, we didn't use as much fuel. So those made the biggest difference. The last set of numbers is the revenues over expenses, and the current year actual says 36 million. It's really closer in the $14-15 million range. And again, this is the number that we're still estimating and we're getting nailed down. And that's because in this report, we don't show the capital contribution amount of $21 million. It is a budgeting construct that we use in order to set that money aside for capital projects. So it doesn't show up as an actual expense yet because it'll be expended later. Therefore, it doesn't show up in this, because now we're looking back in time. It doesn't show up as an actual expense yet. It goes into the reserves, and then we talk about it when we do our financial planning, and we use that to fund the capital projects going forward. And so if there are any questions on that, I'm happy to take them. Otherwise, I'd move on to page 79, which is your look at the wrap-up for the capital budget.
Anyone have any questions? Yes. Yeah, please go ahead.
On page 65, let me get there. Why in the current month actual do we show under expenses what looks like negative numbers for fringe benefits, insurance, taxes, capital, etc.?
Those are, yes, accounting adjustments that are made based on accruals we took earlier. So we did not actually, of course, have negative spending. We weren't getting a positive inflow of resources, but they're balancing out estimations that were made throughout the year. And so the last month is always a little unusual. You can see some very large ones down in capital contributions also.
Right.
And that's balancing that out.
Okay. And then I have one other quick question on page 69. The unrestricted cash is significantly reduced, and is that due to it being invested, which shows a large bump also?
And we're unrestricted. Let me just find them. Yeah, that sounds logical. I was just going to look at make sure I'm looking at the thing you're looking at. Yes, absolutely.
Okay. I figured that, but thanks for the clarification. I'm done.
Those are timing incidents. You're looking at something directly on a certain day, taking a snapshot, and that's how it looked on that day. And then
Right.
normally we don't sit on unrestricted cash in large amounts. That gets taken in by, as you know, by PFM that Leslie was talking about and invested.
Okay, great. Thank you.
Sure. Any other questions? Okay, why don't we turn to page, okay, sorry. Turn page to 79 then. And this is the year-end review of the capital budget. I think the important point to do, you don't have a project-by-project detail here. That is in your actual budget, which I did want to take a moment to say that the District Secretary's office has both mailed out to some of you who requested it, and if there is anybody else who would like an actual hard copy, to let her office know, and we will get one to her to get to you. But it is online, and it is easily accessible online. And what's lovely about online too is you can make it as big, the numbers as big as you want, easily. So it's in some ways, some places it's easier to read online than it actually is in the book form. In that sense, especially the chart, especially some of the tables, so in the appendix. But we have both versions, so good to see that. And that's where you get, the reason I mentioned here, that's where you get like actual project activity, what's happening on those. We have here a summary, and if you look at the bottom part of the page, you can see that we exceeded the expenditure on the annual budget, which is not the normal here. I mean, we had several large payments come in on the timing of payments come in bus and ferry on rolling stock, and that were projects that were being done, buses being purchased and ferries being refurbished. That those bills came through and we were able to get them paid, and they came paid in this year. So otherwise, a lot of success you can see throughout, high expenditures compared to budget, compared to what we projected. Then if you, the report also covers the first month of next year. As you can see, July, and there is very little activity yet so far. And that's, again, not abnormal for the process. If there are any questions on that, I'm happy to answer it.
Once again, does anyone have anything for Joe? Not hearing anything, Joe. I think you covered it, and I think the information is all there for us, so appreciate that very much. Thanks for the presentations. Madam Secretary, this is not an action item, right?
It is not.
But is there anyone from the public wishing to speak on items 8, 9A, or 9B, or address the committee under 10, which is public comment?
We have no other speakers for this meeting.
Well, all right. That takes us to the end of the meeting. Can I have a motion to adjourn?
So moved.
Second.
I have a motion and a second. There's no objections. This concludes the meeting of the Finance Auditing Committee. Thank you, colleagues. It's 11:14 a.m., and we will see you all tomorrow. Thanks.